Good morning, everybody. It's Wednesday, August 7th, 5:25 a.m. Central Time. Grain markets are mixed this morning. December corn futures down 3.5 at 401 and 3/4. November soybeans down 11 and a quarter at 1015 and a half, closing in on some fresh lows. December Chicago wheat up 4 at 570 and a half. December Kansas City wheat up 4 at 582 and a quarter. December spring wheat up 2 3/4 at 615. I wanted to mention this story before we officially get started here. There was some bad Chinese economic data out overnight. China's export missed target and warning signal for Beijing. They did have export growth, but it slowed unexpectedly. And whenever we have bad Chinese economic data, it's not good for the soybean market in particular, given that China is the world's top soybean importer. This is also bad news for just the global economy in general, kind of a signal that demand is slowing down. With that, let's jump into our first story here.
So, Brazil's soybean acres are projected to rise only marginally this year. According to the president of the Brazilian Farmers Group, AproSoja Brazil, acreage expansion will be limited due to soybean futures falling to their lowest level in nearly 4 years. Soybean prices have been pressured due to expectations of a near record U.S. crop. Prices have also fallen because of U.S. economic concerns. If Brazilian soybean acres do expand, even with the expected modest expansion, this will be the 18th consecutive year of growth. During the 23-24 season, acres increased by 4.5%, and then during the 22-23 season, acres rose by 6%.
Farmers in Brazil are experiencing a lot of the same problems that farmers in the United States are facing. Lack of profitability, generally speaking. They're holding on to a lot of grain. I know with regard to this year's corn crop, they're way undersold versus where they would be historically, which is something we're seeing also here in the United States. Flooding in southern Brazil last year could have an impact on soybean acreage. USDA official, the World Board, projects that Brazilian farmers will harvest this. They work with the harvested acreage numbers, close to 117 million acres of soybeans next year. So they're going to plant this fall, harvest next year. So USDA official, the World Board is projecting a 3.3% increase. The USDA office in Brazil is projecting a much smaller increase, and some of these private groups are projecting little to no increase. So if you were flat with next year and you were closer to 113 million acres, that would maybe help to, I'm not going to say tighten, but yeah, generally tighten the global balance sheets just a little bit. The global balance sheets are ugly. We're way oversupplied. The supply-demand situation is out of balance. So in all likelihood, you probably do see an expansion, but it may not be as big as USDA has figured into their global balance sheets, which could be a net positive. Is it super bullish today? No. But if we can take some bushels off the global balance sheet here, that would be helpful to price action potentially.
Egypt is looking to take advantage of low wheat prices. According to Egypt's state run buyer, the country is planning to purchase 3.8 million metric tons of wheat next week. Typically, Egypt buys less than 1 million metric tons of wheat and does not disclose its intended purchases. The large purchase is being made because of low wheat prices. Prices are currently near 4 year lows due to abundant supplies. The USDA is projecting that Egypt will import 12 million metric tons of wheat during the 24-25 season.
Egypt tendering for wheat is nothing new. This happens all the time, but this one is odd in that they're looking for essentially several months worth of wheat in a single tender. Usually they spread this thing out and they'll do a month or two at a time. They're looking for several months, like 6 or 7 months worth of wheat in one shot, which is odd. There may be some problems here. They don't know if sellers are going to commit to freight costs that far out. The quote that Reuters had regarding this, they said this: it appears that Egypt wants to get big supplies in storage, or at least in its books. This could be due to both Egypt's financial problems or the threat of greater war in the Middle East. The other thing is that maybe they just think prices are low enough and this works for them. Egypt is a big wheat importer. They are among the 3 top wheat importers, or are slated to be this year. Indonesia, Egypt, China should all import, according to USDA, 12 million metric tons of wheat. So there's a tie for essentially who could be the top 3 wheat importers. I think this is a good sign, generally speaking. Egypt wants to buy a lot of wheat, and maybe that suggests that prices are finally low enough globally to generate some additional demand, and that is what we desperately need. Now, make no mistake, none of this is going to come from the United States. It's going to come from elsewhere, but it'll still help to perhaps tighten the balance sheets just a little bit, which would be a positive.
So if you guys have not checked out our premium content, you sure need to do so. Joe, can you tell me about yesterday's video with Pete Meyer?
32 minutes uncut with Pete Meyer yesterday. Pete's a professional analyst. We are super glad to have him aboard, helping us out with the premium stuff. The truth about USDA. Are you somebody who believes that USDA is out to get you? The sooner that you can rid yourself of the idea that you are a victim and USDA is the criminal, the better off that you will be. Pete and I discussed a little bit of that yesterday. We also talked in depth about Monday's report from USDA, which is going to include, for the first time in August, some of the FSA acreage data. What is the implication there? We talked about yield prospects. We talked about demand. We talked about biofuels, a lot of stuff. Must-watch stuff, guys, with Pete. He's absolutely fantastic. Go to standardgrain.com. You can sign up this morning. This is a $50 per month subscription. You can cancel at any time. No other fee, no other obligation. Nobody will try to sell you anything else. If you sign up this morning, I'll forward you a copy of this morning's email. Our email goes out every business day at 5 a.m. Central Time like clockwork. It includes the 6 most recent premium videos along with that video with Pete. Check that deal out, guys.
Green Plains posted massive losses during the second quarter. The ethanol maker saw its shares decline by 16%, falling to their lowest level since 2021. Over the last year, shares have declined by 56%. Year over year during the second quarter, revenue fell 28% due to lower prices for ethanol and distillers grains. One of the company's major investors has suggested selling the company due to concerns about its financial performance. The Green Plains CEO, however, maintains that margins are improving and that the company will return to profitability in the third quarter.
Green Plains is a mess. I would imagine that we have a lot of people invested in Green Plains, probably watching. We probably have some people who work for Green Plains watching. Their stock has fallen apart, so it's down 56% over the last 12 months, and it's off 68% from the high that was posted in 2021. Whereas the broader stock market is acting really well, aside from the last 3 or 4 days. They've kind of moved away from their core business. If they would have just stuck to traditional ethanol production. The margins are good, money to be made. I think they're trying to do too much. They've had a lot of projects that are outside of traditional ethanol production that just haven't gone well. They've spent hundreds of millions of dollars on things that haven't really panned out. And maybe they do eventually, but fresh lows in the stock, fresh multi-year lows this week following the earnings report. We'd like to see, our grain buyers in good shape. We need them to be healthy for, just the sake of demand. And this is not necessarily a good sign.
The U.S. radar is mostly quiet here this morning. Some small storm systems are working through parts of Montana, North Dakota, South Dakota, and Nebraska. Temperatures are slated to run below normal across the U.S. Corn Belt through the middle of next week. More seasonable temperatures will return around Wednesday next week. This morning's Euro model favors above normal temperatures during the 10 to 15 day period. Corn Belt rains will be mostly limited over the next 5 days. The 5 to 10 day period is likely to include rain across the U.S. plains, along with portions of western Iowa, Minnesota, Missouri, and southern Illinois. The East Coast will see heavy rains associated with Tropical Storm Debbie.
The rains on the East Coast will be too little too late for corn growers in those areas that were stricken by drought, essentially. Not much rain in the central corn belt here over the next 10 days. Most of it's going to be further west. Some parts of southern Illinois, Missouri, western Iowa, a little bit of Minnesota catch some rain. Looks like South Dakota, Nebraska, Kansas will do okay. The market's not concerned at all about weather, and we are past the days of trading, every forecast, every day in and out. Those days ended, 3 weeks ago.
Bargain buying sent the S&P 500 higher on Tuesday. Following a $6.5 trillion sell-off in stocks on Monday, the S&P 500 gained 1% yesterday as buyers capitalized on deals. Historically, according to Goldman Sachs, it has been profitable to buy shares after a market downturn comparable to the one that we've seen in the last month. Experts claim corrections of 10% or more in equity prices are considered normal and a healthy part of bull markets. They also believe the markets are now oversold and due for a bounce, but volatility is still expected. Also on Tuesday, the Dow Jones gained 0.8% and the NASDAQ rose 1%.
So you lost 6.1% in 3 days, and then we gained back 1% yesterday. We're still up almost 10% year to date in the S&P. Futures are up about 1% this morning. So could that have been it? Just 3-day nasty sell-off, and now we recover. It's too soon to say. But yesterday's action was halfway encouraging. This morning's action was halfway encouraging, but I think the remainder of the week will be important. What did cattle do yesterday?
Cattle were mostly lower. Feeders were $1 lower to 5 cents higher. Live cattle were 37 cents lower to 42 cents higher. Box beef took a hit yesterday. Choice ended the day at 315.81, down 213, and select ended the day at 299.62. That was down 44 cents.
I won't call that a recovery, but at least some stability following some nasty selling. U.S. dollars up a little bit this morning. The S&P is up 62 points. The Dow's up 330. Bonds are off. Gold's up $3. Crude oil is up $1.02 in the September WTI at 74.22. Have a great day, guys. We'll talk to you Thursday.